This summary provides a detailed overview of Realty Income's third quarter 2025 earnings call, focusing on key financial metrics, management outlook, risks, and important statements from the CEO and CFO. Realty Income Q3 2025 earnings call summary introduction. Realty Income's Q3 2025 earnings call highlighted the company's strong performance, driven by strategic investments, portfolio optimization, and its robust, data-driven platform. CEO Sumit Roy emphasized the company's proven ability to generate consistent income through various economic conditions, leveraging its scale, diversification, and institutional experience. The company is capitalizing on increasing investor demand for long-duration income, bolstered by aging global demographics. Key financial metrics and performance. Investment activity. Realty Income invested $1.4 billion in Q3 2025 at a weighted average initial cash yield of 7.7%, a spread of approximately 220 basis points over its short-term weighted average cost of capital. This brings year-to-date investment volume to over $3.9 billion, surpassing the entirety of 2024, excluding the Spirit merger. Sourcing volume. The company sourced $31 billion in volume during the quarter, with a selectivity ratio of 4.4%. Year-to-date sourcing volume reached $97 billion, exceeding the prior high watermark of $95 billion set in 2022. Geographic focus. Europe accounted for approximately $1 billion, 72%, of investment volume in Q3, at an 8% weighted average initial cash yield. This focus is driven by a fragmented competitive landscape, a larger addressable market, and more favorable debt costs compared to the U.S. Europe now represents nearly $16 billion in gross asset value and approximately 18% of total annualized base rent. U.S. investment. $380 million was invested in the U.S., at a 7% weighted average initial cash yield. While U.S. transaction volumes moderated, this reflects a prioritization of long-term risk-adjusted returns over deployment pace. Portfolio occupancy ended the quarter at 98.7%, a slight increase of 10 basis points from the prior quarter. Rent recapture rate achieved 103.5% across 284 leases, generating $71 million in new cash rents, with 87% from existing client renewals. Dispositions. Sold 140 properties for total net proceeds of $215 million. This included 18 convenience store properties for approximately $55 million at a 5.5% cap rate and an 11.3-year remaining lease term. Lease termination income recognized $27.3 million, or approximately 3 cents per share, in Q3. This income is generated when lease termination presents the best probability-weighted risk-adjusted net present value outcome. Management's forecasts and outlook. 2025 investment volume guidance increased from $5 billion to approximately $5.5 billion. 2025 AFFO per share guidance. The low end of the range was increased, now anticipated to be between $4.25 to $4.27. Credit loss expectation. Guidance contemplates approximately 75 basis points of potential credit loss, primarily from tenants acquired through public M&A transactions. Credit watch list remains manageable and granular, flat to the prior quarter at 4.6% of annualized base rent, with a median client exposure of just 2 basis points. Significant risk factors. U.S. competition. Increased competition in the U.S. from new market entrants and private capital is making it more challenging to find optimal risk-adjusted returns. Tenant credit risk. While the credit watch list is manageable, the guidance still contemplates potential credit losses, especially from tenants acquired through M&A. Interest rate environment. While Realty Income is mitigating headwinds from floating rate debt, a prolonged high-rate environment could impact financing costs. Lease expiration schedule. While current rent recapture rates are strong, the company acknowledges a bump in lease expiration starting in 2027, and the sustainability of high recapture rates will be a focus. Highlights. Record investment volume sourcing demonstrates the breadth and depth of Realty Income's platform and its visibility to global net lease opportunities. Strong European investment performance continues to be a key driver of growth with attractive risk-adjusted returns. Launch a perpetual life fund, expected to provide additional capital to support growth objectives and enhance liquidity. Advanced data analytics. The proprietary predictive analytics AI tool is informing decisions across sourcing, underwriting, lease negotiations, and capital recycling, enhancing proactive operations and cash flow reliability. Portfolio optimization. Strategic dispositions of mature properties allow for redeployment of capital into superior opportunities and unlock embedded value. Credit investment strategy. The company is strategically leaning into credit investments with existing, trusted clients, generating higher yields and mitigating financing headwinds. Scale and diversification continues to be a significant advantage, mitigating idiosyncratic credit risk and supporting advanced analytics. Lowlights. Increased competition in the U.S. While the company is strategically pivoting, increased competition in its home market requires careful navigation to maintain optimal risk-adjusted returns. Moderating U.S. transaction volumes. While a strategic choice, it signifies a slower pace of domestic deployment compared to the more active European market. Most important statements from CEO Sumit Roy. Realty Income's platform, which has been 56 years in the making, is a historically proven income generator with the ability to perform through a variety of economic conditions. The data-driven nature of our model, accompanied by decades of institutional experience and our top-tier talent, positions us to capitalize on an ever-increasing investor appetite for consistent long-duration income given aging global demographics. Highlights the company's core strengths and market positioning. Globally, we invested $1.4 billion at a 7.7% weighted average initial cash yield, equating to a spread of approximately 220 basis points over our short-term weighted average cost of capital. This brings our total year-to-date investment volume to north of $3.9 billion, surpassing the investment volume we completed in all of 2024, excluding the Spirit merger. Emphasizes strong investment execution and significant growth trajectory. The European investment opportunity continues to screen more favorably on a risk-adjusted basis compared to the U.S., which has become increasingly competitive. The European investment opportunity remains compelling, driven by a fragmented competitive landscape, a larger total addressable market than the United States, and a current cost of debt for euro-denominated 10-year notes that is approximately 100 basis points inside of U.S. dollar costs. Explains the strategic rationale and benefits of their European focus. We believe that the structural advantages we've cultivated, including scale, diversification, discipline, and data analytics, will continue to create value through a range of economic backdrops. Looking ahead, our focus remains on operational consistency and disciplined investment principles that have guided us throughout our 56-year operating history. Reiterates the company's long-term strategy and commitment to its core values. Most important statements from CFO Jonathan Pong. Realty Income has a proven track record of providing equity-like returns with bond-like stability. The inherent consistency of our earnings has allowed us to produce predictable leverage metrics as well. We finished the third quarter with a net debt to annualized pro forma EBITDA of 5.4x, a fixed charge coverage ratio of 4.6x, and $3.5 billion of liquidity. Confirms strong financial health and predictable performance. Subsequent to quarter end, we closed on an $800 million dual tranche unsecured debt offering, with a blended tenor of 5.3 years and a weighted average yield to maturity of 4.4%. Most of the proceeds were used to repay $550 million of unsecured notes that carried a coupon of 4.6%, and we are pleased to execute on this offering amid historically tight spreads in our secondary curve. Highlights successful debt management and favorable financing execution. As of today, we also have approximately $1 billion of unsettled forward equity, which we believe is sufficient to fund all of our external equity capital needs to fund our investment volume guidance for 2025. Confirm sufficient capital to meet projected investment volumes. Regarding guidance adjustments, the midpoint of our guide is unchanged. There were some offsets predominantly against leasing commissions, G&A, and unreimbursed property expenses that were offsetting some of those gains. Provides clarity on factors influencing the guidance range. In conclusion, Realty Income demonstrated a robust Q3 2025, marked by strong investment activity, a strategic pivot towards Europe, and an enhanced outlook for the remainder of 2025. The company's emphasis on its data-driven platform, scale, and disciplined investment approach positions it well to navigate current market dynamics and deliver long-term shareholder value.